You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means it is time once again for TWIFO, This Week in Futures Options, the program where the name says it all. We break down the week that was and indeed still is, talking futures options. So maybe we'll talk some crude, some metals, some ag, some equities. You never know what's going to be on our radar. Dairy, you never know what's going to make it onto our hot list this week. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Coming at you live, like we said, Thursday, 1:30 p.m. Central, 2:30 p.m. Eastern. If you want to listen live, that's the place to go via Mixlr. If you want to get it on demand, go wherever you find your favorite podcast. We're there. And make sure if you like what you're listening to, you can rate, review, all that fun stuff. We wouldn't hold it against you over there as well. Make sure, however you listen, make sure you send us your questions. We do, yes indeed, we do like to hear from you guys. And I am joined on the program today. Our friend Sean is traveling hither and yon about the globe. I'm not sure where he is right now. I need to play a little Where's Sean on the jingle on this show, because he's not sitting next to me. He's somewhere scattered around the globe. So no Sean this week, but we are joined by my good friend and compatriot, a.k.a. the beloved Futures Options curmudgeon, a.k.a. the founder of Quickstrack, Mr. Nick Howard. Nick, welcome back to the show. How are you liking your new sobriquet, sir?
I am doing just fine. I'm glad to have our next guest today. I won't even say who it is, because I know you like to do that introduction. So looking forward to speaking with him or her, whoever it may be.
It is a mystery guest. Let's see. I am in the big chair, so I do get to do the host introductions and all the guest intros. So let's see. Who do we have here holding down the CME Group hot seat? He is Albert Eng, returning for his second appearance on the show. He is the Director of Metals Products over there at CME Group. Albert, welcome back to the program.
Thanks for having me back on. Glad to be here.
And Albert, I hear some congratulations are in order. You could be called away at any moment. Your wife may go into labor at any moment. So if she does, first off, congratulations. Secondly, you have our permission to go, sir.
Thanks. Yes, that's right. We're expecting our second, due to be a daughter, a week from yesterday, actually.
I find that wives tend to remember that sort of thing if you don't show up for the birth of a child.
I'm supposed to leave immediately and go to the hospital, so that's not going to happen in the next hour.
All right, so let's get into it then before you get called away. Albert, since you're the Director of Metals, we thought we'd do, what do you think? We'll do a deep dive into oil today. No, I'm joking, of course. Let's do a deep dive into all things metals. Let's start, since this is your bailiwick, your purview. Why don't you catch us up? Give us a little bit of a 10,000 foot on what's been going on, what's been lighting up your tape, what are some of the hot trends and developments over there in the broad metals complex, and then we'll dive into some specific ones. What do you think?
Yeah, sure. So I want to say the thing that we've obviously been promoting the most in the last 18 months has been copper for us. Great global economic barometer, and a great growing product for us here at CME. So we're really happy to have been working on it, really happy to have seen some results. So we've hit some good record volume days in the last 6 weeks, record open interest days. And we're just really happy with how we've seen the electronic liquidity we've been growing here progress, seeing the product become more and more accessible, especially, I mean, you can see it right on your front end on like an Interactive Brokers. It's been more accessible than ever. So we're happy to see more and more participation. That said, we're actually very happy to see some large institutions start to put up very, very large block trades. And that's kind of like the big win for us recently is just getting the really big boys on our block community in complement with a really good screen offering. So those are some things happening on the base metal side. And in the world of silver and gold, I think it's kind of business as usual. We've been humming along. Volumes are doing pretty well this year. Vol is kind of as expected, kind of right where we left it in the last 2 years. But the price action's been a little bit better. A bit of that might be on the back of currencies more than it is supply and demand for the metal or even on the back of rates. But right now we're pretty happy where we're standing. The place looks primed to do something, but it perhaps looked primed for some time. Is all I'll say for now.
Yeah, I think primed to do something is a good description for a lot of the metals contracts. They always seem primed to move in a variety of different directions. Let's start then. Nick likes having you on because it gives him an excuse to just go deep into one of his favorite contracts, which is, of course, gold. So let's start there. In the shiny stuff, gold feeling a little bit of pressure coming into showtime. We saw some good numbers coming out of the Labor Department. Jobless claims falling by 10,000. Again, that's a seasonally adjusted 202,000, which is actually the lowest level since December of 1969. So that goes back a ways. So some historic numbers there, all that combining to really weigh a little bit on gold. Not a ton. We're seeing it coming into showtime. It's off about 1.5 handles or about 0.1% or so on the week. So not huge numbers. Off. Important thing is that we're shy once again of that very important psychological level of 1,300 at about 1297 right now. The vol, as Albert kind of alluded to, it's been a mixed bag. It's kind of been a mixed bag for a while out here in gold. It's never really caught a bid that it could really sustain, but as we said many times on the show, it was cheap enough that if you were deft with your scalps, you could still make it work to your advantage. And we're kind of seeing that right now. It's a mixed bag, off slightly across the term structure. There's a couple of months here that look a little bit more rich, but other than that, really, it's coming off pretty much across the term structure. In terms of overall OI, again, as Albert alluded to, kind of a quiet week, up about 2.5%. Most of that action coming right now in, where are we? Oh, there we are. Okay. We are in the May contract, doing nearly 30% of the paper this week, about 29%. But that's not where the biggest print went up this week. Nope, it was actually out there in, looks like the April week twos here, with about the 12 double put, 1255 put, leading the dance this week. 4,000 and change, about 4,100, almost all of that going up today. So today's downside move sparking some interest in some puts. Of that 4,100 and change, 4,018 went up today. So that was pretty much interesting. It looks like also the 1270 puts went up today. It doesn't look like it's quite 1x2 volume levels, but it's pretty close. It's about 2,040 versus 4,018. So could be a 1x2 going up 1270, 1255, put 1x2. All that paper going up today. Let's see what else was lighting it up here as we go back to the month that did most of the action, which was May. The 12 double puts actually active out here as well. 3,000 of those going up here today as well. So that 1255 strike active today, kind of interesting. Maybe a bit of a time spread going on there as well. So it could be a 1x2 in the puts, could be a time spread, a lot of things going on out here. But the moral of the story is it's puts leading the dance out here, pretty much wherever you're looking out here, and pretty far out of the money puts too, about 40 odd handles out of the money for a lot of this. Look really quickly, we like to look for some esoteric prints as well, and we got some today. Usually it's on the far upside, and we got some of those for you as well, but it looks like one of the weirder prints, and for decent size, 10 half puts coming up in Dece of this year. So that's 1,050 puts for those of you out there who are new to the nomenclature, listeners, going up nearly 3,000 times this week, 2,964 times. Of that, pretty much all of that going up on Monday. So a ton of 10 half puts going up on Monday in December, which is, that's fairly bearish for gold, if it is indeed a buying on those puts. We shall see. Also worth noting, the 18 half calls doing some damage this week too, doing about 1,300 of those coming in June of next year. So Nick, a lot of interesting esoteric prints going up out here in gold this week. What's catching your eye from a shifting and sliding and a vol perspective? And if you have anything you want to weigh in on those funky 12 double puts going up today, have at it, sir.
I think what's most interesting, if you're looking at the report, you'll see for yourself that the shift and slide, the overall vol levels are not that much different. We have the bids coming out on the curve. So September, October, November, maybe September, October mostly. November, December have a little bit of a bid, but we got some good bids in Sep and Oc where you're up over 2.5 vol percent. I'll have to take a look and see what happened there specifically that changed anything. But what I noticed, shift and slide, is really, the market's pretty flat from a vol standpoint, as Albert mentioned. Not much change. We had a little bit of a move today. So we down to 1285 and back up to where we were. So the first thing when you see something like that intraday, we're going to go take a look. And we're still working on doing the paying the rent column here on the TWIFO report. But definitely with the range today, you paid for the volatility levels where gold is trading. So that is something that I'm always harping on here. Low volatility, Albert mentioned as well, a good price range. There's lots of trade in the gold. And I just really feel like there's plenty of opportunity there. We kind of hang around a level, but that level's pretty wide, and we talk about it being 1270 to 1330. It's a $60 range. There's a lot of gamma you can scalp in there. You got to pay attention, put your levels in. I think there's plenty of opportunity. So I would say that's the first thing that's really of notice. And then secondly, with that move down, we're right back to sort of the same. We had $5 change in the first two contracts in terms of what the at the money was. A little bit of a slide down on the vol, a little bit of a shift, so really flat. But what's really, I think, most important to keep an eye on there is that if you look at the May, which is a 21-day contract, and the June, which is a 54, and then the July as well, 80 in change, all of the puts firmed up, and the calls were generally offered. So even though we have sort of a hunch from a future standpoint, we saw a little bit better bid now with the puts and a little bit better offer on the calls. So as we start to, and that means we're pushed, puts were cheap last week and the calls were expensive to the at the money. Now we're pushing towards, again, where that 25 delta is getting close to being about the same value as at the money. And we're talking about a 1% difference, which is like it's really small amounts, 0.084 and point and a quarter vol on the call side. So we're getting to that look on the vol curve where it looks like a belly, which means we can go any which way, which makes a lot of sense at this 1300 level, which means that you got to start looking for, 25, 20, 15 delta calls and puts to make some plays because there's going to be some movement when you start to get that belly formed.
Everybody loves forming that belly, right there, Mr. Nick. It's tasty at the very least.
I avoid forming the belly. I mean, I should say the flat belly. I like the flat belly.
There you go.
The gold has a very fit belly.
So
How about that?
Oh, so you're saying gold has rippling abs right now? Is that what you're saying?
Yeah, it has rippling opportunities in mid delta puts and calls. How about that? That's how I like to look at it.
Good title for the show, The Rippling Abs of Gold. What do you think? How about that? That would be
I love it.
All sorts of
I love it.
All sorts
Fluid
of
gold.
Fluid gold. There we go. Albert, you heard us kind of breaking down all the various nuances here for all things gold. What's catching your eye out there in the gold complex these days?
Yeah, I think you touched on the biggest piece I had for, and that is that very large 1270, 1255 put spread that actually went up in our week 2 gold contract. So one, this kind of touches on something we've been working on for a while. We've been trying to get our short-dated gold options. So these things expire every single Friday on a 4-Friday basis. And they've kind of exploded in activity in the last 12 to 18 months. To wit, today we saw a 6,000 lot trade happen. So what you were analyzing, basically pointing out the large open interest, the large volume trades today by strike. So we saw 2,000 by 4,000 of the 1270, 1255 put spread trade. So this is a 8-day option. And basically this is kind of like a 10 delta versus a 3 delta play. And you could actually see it if you had quick strike open or on your CME direct. You could see that around 10:30 a.m. Eastern time to all the way about 11:30 Eastern time. This thing was trading on the screen electronically. Just by the order of how it printed, it looks like we had someone selling it from 90 cents all the way down. But it does look like this is something interesting, right? Now we know that there's 2,000 lots of a long or a short at the 1270. There should be some good short-term interest should we go down just even a little bit. But it's trades like this that pique my interest, that this is kind of like a not quite premium flat 1x2 that happens with only 8 days to go. So someone's clearly putting on an opinion here in the short dated realm, but kind of like Nick said, this is it's kind of like a low gully. And that's one thing that I looked at before coming on the show today, that over the last, I want to say even 3 years, you've started to see the put skew really start to flatten out. So using your analogy, the put belly was actually kind of big in 2014 and 15. In 2016, the put started coming flat, and almost for the last 3 years, we've seen a pretty persistent spring of puts, and that kind of coincides kind of like where we've lived on the price of futures for copper, silver, and gold. You could kind of find this flat belly of puts that exists, but it puts you in an opportunity to where you can actually buy vol below the at the money if what you're interested in is puts right now. So today's biggest trade that hit me today was this giant 1x2.
Yeah, that is huge. And, it's interesting to note, we've had a lot of other people on representing various different complexes at CME on this show. And some of them, have struggled to get traction in the weeklies for whatever reason. Maybe it's a function of the product or how it works or how it trades. They just can't get a lot of action. They'll trade the monthlies all the way down to the last week, no problem. But the weeklies, they just can't get traction. That clearly is not the case here in gold. Like you mentioned, the biggest trade of the week going up with, 8 days to go. 6,000 contracts. That's got to make you guys happy over there that you're seeing people, taking these trades and doing them all the way up into 8 days to go, Albert.
Yeah, we've seen it happening in the marketplace for a very, very long time. I want to say probably 3 or 4 years ago, if you wanted to trade a short-term option, you'd be looking toward the GLD ETF, or if you were some kind of institution, you would have tried to call up a bank and trade these things OTC. But now I fully believe that we're probably the leader in listed options, certainly for the short-dated region now. So just last month was our record month. We traded about 5,000 contracts every single day. And now seeing these large trades happen in the short-dated, I want to say that the short-dated product is pretty much close to its kind of like big cousin of the monthly product. So it's almost exactly the same in liquidity. If you were to pull up a screen, you'd see like 2 or 3 tick markets, several hundred on each side. So the size is definitely possible. The screens are definitely aware that the paper is hitting it now. So if you want to put on a short-dated opinion, the gold weeklies are certainly a place to get some good liquidity for it.
Yeah, it is interesting that people are certainly not reticent to come in and blast away at 6,000 contracts of a weekly put spread in gold, whereas maybe energy, they're still a little bit more reticent. We've talked about this before on the show, why that is. Maybe it's something to do structurally with different products and the nature of how they trade. But it is interesting to see that, the near-term, shorter-dated liquidity is active out there in the metals versus some of the other products, maybe not so much. It's interesting stuff. Speaking of other products, Albert, you're our guest. I'll let you choose where we want to go next. There's quite a few metals products to sink our teeth into. So where do you want to land our hats next, sir?
I had one last piece on gold, and before we move on to
I'm sorry, we're done. No more gold. No, I'm just kidding. Go for it.
I had one last exercise that I did, and I pulled all this out of Quick Strike just this afternoon. What I did was I tried to overlay what does 30-day vol look against 360-day vol, just to kind of say what is the short term of the curve look against what kind of like the longer end of something someone would trade is. And I found it pretty interesting that in 2017, you saw about a 3.5 vol difference to a 4 vol difference. That difference started to shrink pretty heavily into 2018, down until Q4 of 2018. That differential, instead of being closer to 4, is about 1.5. And this year, we're finally starting to see long-dated vol start to rise again. So now that same spread, 30-day vol versus 360-day vol, it's closer to 3% difference. So I'm finally starting to see that even though in gold, silver, and copper, the at-the-money vol is probably in the 1 to 2 standard deviations below the mean of the 5 or 10-year average, that we're starting to see long-dated vol in gold start to get a bid again. So that hasn't happened in some time. The last time I saw it happen, we reached a little bit of gully in 2016, and then we started getting a bid so that in 2017, the spread kind of widened. So we're starting to see it finally widen again. Hopefully there's some kind of trend developing, and maybe in 12 months we'll see some more action.
That is interesting because that's something we've lamented here on the show for a while, is that gold vol can't seem to really catch and sustain a bid. Part of that is because you're right, they're bidding down the long-term vol. They're not really seeing a lot of future for it. But if that is starting to change, that might portend some interesting developments going forward for everyone who's kind of been writing into us and being like, what's going on with gold vol? Why can't it sustain anything? Why can't it catch a bid? Blah, blah, blah. That might, maybe that will start to change. Certainly, it's looking farther out in the curve a little bit. It does seem to be the case. Interesting stuff. Since you passed on choosing before you went back to gold, Albert, I'm just going to keep on rolling then with silver. How about that? Silver rolls nicely with gold. People they tend to look at it. We haven't talked about silver a lot on the show because, quite frankly, it isn't the hottest, the sexiest of options products. It does some paper, but not a ton. Coming into showtime here, we're seeing silver up slightly on the week, about 0.2% or close to it. We're seeing silver vol looks like mostly coming in, except for the front portion of the curve, but that's mostly gamma anyway. Once you get shy of 2 weeks or so, once you get past, I should say, 2 weeks or so, the vol is mostly coming in. But again, silver vol, kind of like gold, always been a bit of a mixed bag. In terms of the volume, up about 2% this week. So not a bad week for silver, but not exactly lighting it up. The liquidity, though, far more concentrated out here in silver than we have seen in gold, probably because it does a little bit less paper than gold does. And most of the paper, about nearly half, 49%, coming in the May contract, and looks like 1475 puts are where the action is. That's 14.75 if you don't trade silver very actively. So we're shy of the 15 handle now, listeners. And doing it fairly active all week, actually, with the lion's share. The number of the beast, 666, going up today, about 230 going up on Monday and Tuesday. So a total of about 11, nearly 1,200 going up on the week, slightly opening there. So slightly out of the money puts are kind of leading the dance here this week. Also seeing a little bit closer to home, 1490 puts doing about 800 or so this week. Again, a lighter volume product here than gold itself. Listeners, let's just look to see if any calls. Then you got to go out, all the way out to 12 quarter puts out in July of this year. That's where the next biggest trade is, which is interesting because those are fairly out of the money, shall we say, going up about 750 times for those. So some esoteric put prints seems to be the order of the day out here in silver. Let's mix it up. Albert, and obviously silver doesn't get top of mind for us all the time on the show because it doesn't do a ton. I imagine that's probably the case for you as well, but it gets lumped into the conversation with the other precious, the other shiny stuff. So what's been on your radar? What's been maybe lighting up your tape over there at CME on the silver front, sir?
So on our side, we've seen some pretty good again, pick up on the short-dated options. Only last year did we adjust our short-dated weeklies. So same exact structure as the gold now, except we made our strike increment a little bit more granular so you can trade them a bit more precise. So we looked at the strike increment. We thought that it was a bit too wide, being that it was a short-dated option. So what we recently did is we adjusted them so that instead of every 25 cents in silver, you can see the strikes every 5 cents. So after we made that adjustment, we actually started to see them trade. They pretty much did no volume until we made this change. And now they're all the way up to about 150 to 200 short-dated contracts per day, which is actually growing into a nice little bit for us. And we think they probably have more legs to go soon too. But beyond that, the vol story is pretty similar to what we've seen in gold. In 2014 to 16, you might have been looking at the mid-20s to low 20s as a normal vol range. And nowadays, if we get into the high teens, that's kind of like our happy place. Interestingly enough, if you overlay silver vol and copper vol, they're not actually that different. I mean, they're industrial metals. Obviously, silver has a precious spin to it, so it does have a pretty good correlation to platinum, palladium, and gold and whatnot. But they're pretty close when you look at kind of implied and realized vols for the last couple of years. So that was one thing that struck me. And I would say just recently, I think silver does stand. I mean, it's always been said, if gold moves a little bit, silver moves or more. So I think if we were to see any kind of move in the precious metals, if you had an opinion, expressing them, it's silver is actually not a bad way to do it at all. That implied vol is probably in the 15% range, whereas your gold vol would be in the 9% range. But in terms of like kind of the big insightful blocks, we've not seen as much, but every now and then we do see something interesting. And it's just something that we keep on the radar, always looking for ways to see if something would help the product gain a little bit more steam. I think it would probably be just for the price of silver to be more interesting than it's been in the last 36 months.
Yeah, it's always interesting to me to see how just little subtle nuances and tweaks to a product can have such impact. Here's a product like silver. Hasn't moved a ton. It's been kind of languishing in those mid-teens for a while. So maybe a 25-cent increment that wouldn't be much in another product maybe is a lot for this kind of price level here. So you make it nickels and all of a sudden people respond. It's always those interesting kind of nuances that spur liquidity that I always find interesting and sometimes surprising. Nick, what do you find interesting and or surprising? You don't get a chance to talk silver a lot here on the show. The werewolves in our audience will be thankful for that. But what catches your eye out here in the other shiny stuff, sir?
Well, I think the point I want to make, we have a new thing that's going to be coming out pretty soon where we generate some alerts over a 2-year window, and I look back at last night's alerts and silver 60 and 90-day volatility were on that alert, meaning that it was the alerts we have set up. It was into the third standard deviation of cheapness. Okay, probably out even further than that. And pulling up the chart for the last 5 years, silver, both the 60 and 90-day vol is at its lows and trending lower. So again, like we talk about all the time, when you start to see those extremes, obviously it's trending lower. It's been on its lows probably since the halfway point of the new year, but prior to that, it was just sort of stuck in the range that Albert was saying. It was in the 15 to 20 vol range for the last couple of years, but now we're trending lower. And again, how I always talk about when you start to get at these low vols, yeah, it's low for a reason. It's because people are selling it. But I really believe that in these situations that there's plenty of good opportunity. Again, I haven't looked at silver too much, but just knowing that I only looked at the last 5 years, and I would venture to guess that it's probably the lowest it's been for as far as we have it. I'll go back. I think we have 10 years of that, but I'm going to go back 7 right now. It's low and going lower, but I think that it's something that, this is the lowest we've been in a long time, and probably going to go lower, but at some point. And it might even look like, if I was eyeballing it and say that it looks like it's tapering off, it's hitting its little bit of a low asymptote down there, it might be something to pay attention to. And that's, whether you have an idea if it's going to just move in either direction, or if you just think that if you look for a cheap call or put and hedge it and try to scalp the gamma, just like we talk about all the time in the gold option. So cheap vol, been getting cheaper, but that means you got to start paying attention. Anytime it gets cheap, you got to pay attention.
So, but listeners want to know, Nick, how are the abs in silver? Are they rippling? Is it more of like a Santa's belly? What are we looking at?
Let's see what I think there. I think we have sort of a happy, contented smile. So it's one of those things where, the 60 and the 90-day look pretty similar. You have, let's see.
So a smile. So maybe he had liposuction.
It's a little bit of a tilted smile. It's like the puts are offered to the calls from a delta standpoint, and they're pretty much the same shape. So puts offered, like I always say, puts are offered like that at a really low vol. You buy them, hedge them. If something bad happens on the downside, you got a low vol. If it goes up, you get your money back, right? Even if the vol's low and your gamma, if the vols get lower, your gamma kicks in harder. You get to sell your future sooner. So, it's looking good for that mini, like we call it, the mini straddle trade. Cheapo options hedged, scalpable.
We'll have to bring Uncle Mike back on, see how he's doing with his long-term silver collar. I know
he's holding. He's like a vampire almost, because it's like an undead trade. That thing.
Yeah, exactly. I make fun of him because he hasn't done anything on it in like a year. But maybe we could prompt him to have a little action. Speaking of having action, one of the complexes on the metal side that we've seen a lot of action in of late is moving away from the shiny stuff, getting into, they call it the base. It's such a pejorative term. Let's call it more of a production type metal here. It's copper. In fact, it seemed like just looking over what's coming out of CME lately, tweets and the releases, it seems like copper is half of it at any given day. In the last, just a couple weeks ago, March 26th, set a new OI record out there with 67,500 contracts out there in copper options. So it's been setting new records. People have been hitting us up about it as well. I'll just read one of our listeners' questions, because he kind of has the same question I have, Albert. He wants to know, what is behind the surge? Oh, this comes from Josh Tanner. I should mention his name. Josh Tanner wants to know, what is behind the surge in copper option open interest? I thought China was the big driver, and their economy is in the toilet. Well, in the latter part of that, we've seen some data recently that maybe that isn't the case. But Albert, this is kind of a question we've had for a while now. The narrative on copper forever has been, how Chinese demand goes, so goes copper. When that's kind of trending down, copper should not be as active, you would think. And yet we're seeing kind of the exact opposite. People are piling into copper at record levels. So what's going on in copper these days, Albert?
Yeah, so thanks for that. That is one of the things that we've been most pleased about on the metal option side of things. Just to give you an idea of where we've grown from, I want to say about 20 months ago, our average open interest for the contract was only about 4,000 OI. So to hit 67,000 recently was just a really proud achievement of ours. But people are piling in, and I think more now than ever, people are actually expressing opinion in copper options. Whereas, even when it was much, much more interesting, people were simply not entering the copper vol market due to the fact that we had the copper futures for some time, but our copper option market was not quite as liquid as it is now. So I would say that the biggest single driver is we've really been out there trying to promote the product, build the liquidity by engaging with our kind of like our top tier market makers that are in gold and silver. And I'm pretty happy to say that the adoption has been really strong. So that's probably why we're seeing OI start to pick up. And one thing that has actually been putting a smile on my face is this has been a interesting market, but not the insane market. So as far as options trading goes, as a percentage of futures trading, we're only starting to catch up to where gold and silver has been for us for a very long time. So gold and silver options might trade anywhere between 10 to 20% of underlying futures volume. So using silver as an example, we've seen like 8 to 12,000 options trade on the back of 100,000 futures trading every single day. We've been a really good on the copper future side for a couple of years now, growing from about 30,000 a day 5 or 6 years ago, all the way up to about 120,000 a day now. So to now see us reach this 3,000 or 4,000 level with really burgeoning open interest, and if I kind of overlaid silver open interest to copper open interest, because I'm starting to see the two markets become similar. Silver open interest has been probably in the 250,000 range for quite some time. But to see us finally start to catch up on copper, really, really puts us in a good place. But to answer the question on a broad sense, China is definitely the big story when it comes to copper, and where China goes, so copper goes. But in terms of what could change the equation at any given point in time, trade war issues could really start to affect how we view China's GDP in the future. That with supply issues. So while it appears to be in a somewhat calm environment, that doesn't prevent people from putting on a position. And again, kind of what you were saying, in what you were just alluding to, copper is starting to get into this kind of low standard deviation range as well. So if I pull up kind of the same exercise that Nick had done with the silver, using one of the vol cone tools out of Quick Strike, I mean, copper vol, even though it has been, the historical vol has actually been realizing an okay amount. Copper implied vol is somewhere between the 1 and 2 standard deviation low for the last 5 or 10 years. So I'm pulling it up right now, and all the way up in the beginning of the curve, all the way out to like almost 360 days out. Yeah, we're seeing close to a 1 or 2 standard deviation low on this thing. So it's probably, I would say, getting more and more interesting because there's cheap vol out there.
Yeah, cheap vol does tend to spur some action, even in a contract where the underlying is shy of $3, listening right around 291 or so right now, coming into showtime off about 2/3% here on the weeks. That's usually, again, another reason why we typically don't see such lower price names translate into a lot of options volume, because the underlying in and of itself is a good substitute for a lot of that leverage and exposure you want to get. It isn't that expensive. But still, we're seeing this story of copper continue to grow. Let's look here really quickly. The vol, again, a bit of a mixed bag here. Near center portion of the curve seems like it's come off a little bit. Longer term, kicking up a little bit. So maybe some differing perspectives out there as we're seeing differing data about the health of the Chinese economy as well. So it might make sense. We're seeing a little bit of a bifurcation in the volatility out there across the copper futures there. Let's look really quickly where the action was. OI up about 4% this week, so a pretty robust week. 63% of that coming in where are we here? In the front there in the May contract. going, yeah, so not quite the front contracts going away in the weeks going out in today. So we have, or I should say tomorrow, so we have about 21 days left in the May contract here, 2/3 roughly of the paper this week. Looks like we're at about 291 listeners here in copper. 283 calls were the big winner this week. All of that today, pretty much, 1,420. Interestingly enough, 420 of the 3 calls also going up today, which is weird. That'd be a strange ratio if that was indeed a ratio. So maybe a vertical with some other action going up on the 283s. But either way, 1,420 of the 283s, and the 3 even calls, $3 calls, 1,238 of those. Those traded actively throughout the week, as you probably would expect. Even money strike, a lot of interest on those. That's kind of where the lion's share of the action was this week. Looks like slightly in the money and slightly out of the money calls leading the dance. Mr. Nick, another one we don't get a chance to really talk about a lot, but it's kind of a fun one just because there's been so much interest and so much growing action out there. Anything on your radar copper-wise these days, sir?
Well, I'll point out the same thing. And Albert mentioned that the copper and the silver sort of look a little bit similar. Their levels are probably close outside of the front month in terms of absolute volatility numbers, but they're kind of moving in the same direction. The puts are at least and again, the liquidity. I tweeted out the open interest for copper, and the liquidity and the action from an OI standpoint is in the first 3 contracts, which is generally the case for the commodity products across the board. But you're seeing we're getting puts are a little bit less firm, calls are a little bit less bid than they were. So you're getting into that I don't know range, right? You're getting into that, maybe we could call it like a shrug shoulder, right? You have the wings are both bid around the same, right? The little shrug emoji where you got the hands in the air on both sides.
Called the graph.
Yeah, the right. It's the curve is we're in that kind of mode where it's the vol curve at least is saying it's semi-directional or generally directionless, right? You still have a little bit of skew one direction or another, but like I always say, in these cases, I just love 20, 25, 30 delta. Again, I call them the mini straddles. I'm coining that term, trademarking mini straddles, because, I will say one side story. When we got taught at O'Connor and Associates, had a great educational program for learning options, and one of the exercises was we talked about a straddle and how as you hedge the straddle, that wedge that gets created by a long call and a long put, and it's got the depression underneath the x-axis, right? As you hedge, you sort of move that up, so you're pulling the wedge out of the dirt until it gets above the x-axis, so you can get your premium back. So those mini straddles, it's the same thing, and they're usually skewed one way, tilted one way or another. They're tilted to the downside where it may take you a little longer to get your money back, or the upside a little less, right? Depending on which side of the money you're on. But these mini straddles are a great way, and Albert mentioned the cheap vol. Hedged cheap vol straddles. Once you hedge something, you basically have a straddle on. Great way to get in the market. Not a lot of premium, probably lower margin because you have options and futures together. In particular, it's a pretty decent looking strategy when vols are low or kind of been trending lower or have hung around the lows for a long time. So that's what I'm seeing there. We'll have to find a way to kind of merge the gold, silver, copper together so it's easier for us to chat about in general.
And maybe we'll do like a metals report, like overall metals report.
One shouldn't exclude the other. Maybe we just kind of build something that looks at the first 3 contract months, and then
we're biased. We're gold-centric here. It's funny. On one of my other shows, talking about mini straddles, we used to joke about forming a band and call them the mini metals, and they'd all be small size, shall we say, metals player. Maybe the opening act could be the mini metal straddles. What do you think?
Mini metals. What's that? We can get mini me. He could be.
There you go. He could be the front man for the mini metal straddles.
I think he's dead though.
Oh, he might be. You're right. There you go.
Trower or Trier. I forget what his name is.
See, bringing the mood down there, Miss. That's why you're the beloved curmudgeon of the futures options landscape. We're running up against it here, but Albert, we got to talk about some other product categories. But really quick, before we shift out of the metals, give us one more. If there's another product that's kind of on your radar, maybe you think people could be options activity-wise, futures-wise. If there's another complex that's really lighting up your tape right now, what is it, sir?
There's one area that we don't really get to talk about a lot, and it's really starting to garner some interest, really starting to pick up steam. And if it does, in fact, go the way we hope, I believe it could be one of the future kind of like flagship franchises for us. It's Ferrous Metals. Namely, we're looking at U.S. North American steel prices right now. So we have a pretty lively contract for hot rolled coil steel. It's got tons of open interest out there. Trades about between 600 to 1,000 contracts a day, settling off of a monthly average index. But we see anywhere close to 20,000 open interest lots on this future. And we're finally starting to see options trade on the steel product. So this has been a pretty cool initiative that we're working on right now. What I'm putting together is what we're doing is we're hoping to very soon start to publish volatility curves in entirety for steel options as well. So right now, the policy for our steel option franchise is we don't post any indicative vol, given that there's not much open interest and very little trading. But in an effort to kind of let the marketplace know where people on the inside of steel, so namely the brokers that handle OTC flow, the producers, the banks that have information, we're going to start having people start to contribute indicative vol, and then we're going to post indicative settle based on where we see the implieds and where we're getting these surveys done. So hopefully that's something I can talk about in the future. If we actually start to see steel options trading, that would be a dream for me. But in the meantime, if you've wanted to put on, if you've had any opinion on steel, and given kind of like the Section 232 tariffs that have come into the news recently, steel is pretty relevant in terms of the global macro story, even geopolitical. Steel is one of the things that we're quite excited about. And, once upon a time, a very, very long time ago, someone had a really awesome idea to launch oil futures when they had not yet existed. And this could be the next oil for us. I say that with a grain of salt, and I know that this is just a dream for us, but I would love to see us build our steel franchise here.
Wow, that's high expectations. I did not expect you to hit steel and the ferrous metals. So interesting. I was expecting you to go somewhere else. So there you go. Throw me a curveball. I like that. So ferrous metals. See, the trade war bringing life to segments that we really didn't think had any life in them. So there you go. Interesting stuff. Keep an eye on those, listeners. Since he mentioned oil futures, let's do real quick hits. Got to give you a crude. You guys love that. Coming into Showtime, we're seeing WTI hovering near 5 months high, seeing Brent actually breaking 70 for the first time in about, since November or so. So it's been a while for that. WTI coming to Showtime a little bit north of 62, so maintaining over that precious, much-watched 60 level, up quite around 2 handles on the week, or a little over 3, about 3.25%. Vol, as you might imagine, you get north of that 60 handle, comes in pretty aggressively. That's what we're seeing right now out there with crude vol. Let's look really quickly, jump out to what is lighting up the tape out here. It is May, doing about 35% of the paper this week, and the big print out here this week, as you might imagine, hovering, breaking through, going through, threatening that 60 handle means we're going to be seeing 60 strike trades. That's exactly what we saw. 16,000, I should say 15,999 to be precise, of the 60 puts out here in May, dominating the tape. That's the number one trade. Number two, 65 calls. So calls not too far in the rearview mirror, with about a tick under 14,000 there as well. So interesting stuff out there in crude oil. Let's look really quickly, as we like to do, see if there's any weird, crazy, interesting, head-scratching prints. About 1,000 of the 35 puts going out in Dece of 2021. So if you're into long-term bearish activity, or perhaps just outlying out-of-the-money interest, we don't know what they're up to out there, 35 puts in Dece of 2021. Interesting stuff. Mr. Nick, before we roll on to equities really quick, I know you love your crude. Anything catching your eye in the Texas tea this week, sir?
Well, I love the crude. You definitely get that right. What was I just felt like one thing I was talking about with Macro Hedged, who's a great user of Quick Strike, and also has been a great for the market out there, providing directional and options plays for pretty good levels. We were looking at the vol curve, or just kind of talking about what's going on in the crude. And let me get my thing up here. What's going on? It's 221. It's a little slow. Hold on a second. Where are you? Come back, Volker. There we go. Yeah, it started to look like, you mentioned Brent over 70. We hung around over 62. The upside is offered in crude, okay, and the puts are very bid in comparison to the upside. So, and again, maybe not at levels that are tremendous in terms of the highest they've been or the lowest they've been, but when you start to look at the 20 delta call right now is the cheapest option on that crude 30-day contract, and I think the May and the June that's right between the May and the June. I was looking at the June in particular, but as always, here's another thing. I mean, trading is all about. Albert was a market maker too. You were a market maker, and the things as market maker is. I think we always got blinded by the markets we had to make, and the prices we had to take or give. And, when you're not market making, you're just kind of looking at stuff. These are the kind of things we should have been paying attention to, So these 20, 25, 15 delta calls are cheap. That means that they should start to really garner some attention, and you should start trading them. For a couple of reasons, I like to think of this, right? If the market continues to go higher, those are going to become in fashion because, people are going to get spooked like they always do. If the market goes lower, and it continues to go lower, right? You would expect that the puts are going to get offered and the vol curve is going to start to get balanced a little bit. So that's why I like them hedged. I always like when you find a cheap spot on the curve, and it's not just all the time. It's like certain times, the shape of the curve, the level over time. But this is a good time, 25, 20, 15 delta, buy those calls, hedge them. It's cheap vol. You keep going up, you get bid vol, you make money. It goes down, you break even super quick at the 60 handle. Okay, so something to take a look at. That's what I'll mention because that's what that's the kind of stuff I pay attention to. I think, and again, if you have a flat curve across the board, maybe it's a strangle as opposed to just a call or a put. Because you basically hedge themselves. I just like when the curve starts to look like this.
You do like your curves out there, sir. And speaking of cheap vol, it's getting cheaper out there in equity land as well. We're seeing most of the major equity indices in rally mode. Well, actually, I shouldn't say most because it's kind of a bit of a mixed day today. But over the last few weeks, we've seen vol pretty much coming in with that one spike from a few weeks ago back notwithstanding. We're seeing that again coming in today. We're seeing the VIX down about 1360 or so, down about 1.2 handles. RVX following suit exactly. So the Russell vol also off about 1.2 handles. That means that spread between large cap and small cap vol is unched from last week, which is kind of interesting. Still about 3.7 handles, so just shy of the 4 handles on the wider end of that spectrum. We thought it might come in a little bit, tighten a little bit. Nope, that's not what we saw. A rare week where Russell vol and large cap vol are kind of moving in lockstep. Usually one of them is outpacing the other and by a decent margin. This week, at least coming into showtime here today, not so much. And in terms of what's lighting it up out there in the small caps, we're seeing the upside calls. Russell coming in at showtimes at about 1570 and pretty decent sized prints in the 1595 calls going out tomorrow. So again, in the weeklies, we were touching about near dated contracts before. The equities are where people love. That's where most of the story is these days, is in the weeklies. And we saw going up yesterday, actually, over 1,000 of these 1595 calls going up, mostly opening for 2 days to go. So interesting stuff. That's a pretty decent run for the Russell to get up there. So maybe a bit of an overwrite up there in that 1595 level. But either way, interesting action out there. Let's look really quickly if we see anything commensurate in the old E-mini itself, the E-mini S&P. Really quickly, we're seeing that at about 2881 coming into showtime. And the large print out here, it looks like it is a little bit slightly out of the money calls. It's the 2900 calls, again with a day to go. So very, very near term, slightly out of the money calls leading the dance in most of the major equity indices out here, at least as we come into the end of showtime. All right, and unfortunately, that music means we've come to the end of this epic journey. We could spend hours talking fluid milk, and we didn't even get to ags. There's so many products to talk about. But we wanted to spend some time talking metals. And Albert, since you were kind enough to risk missing the birth of your second child to talk metals with us, Before we go here, you mentioned you kind of threw us a nice little curveball with the Ferrous Metals. If listeners want to learn more about that, or maybe some of the other products you guys have up your sleeve over there in the metals complex at CME, maybe they want to reach out to you directly with a question. Where should they go? What should they do?
Yeah, so we're really working on the resources on our website, but if you go on CME.com, you can find our metal section. There's quite a bit of work we're doing there. So you can navigate quite easily to a landing spot that'll show you all things ferrous on our CMEgroup.com site.
I'm going to keep an eye on those, Albert. Maybe next time you come on. I mean, that's a bold claim. I like that. It's going to be up there with the WTIs of the world fairly soon. So interesting stuff over there. Mr. Nick, what do you have that's interesting for us up your sleeves over there at Quick Strike these days?
Up the sleeve. Let's see. So we've alluded to it over. I'm going to take not as long as the intro, but not as short as usual. So we probably have plenty of time because nobody will fall asleep during this, I hope. We have, stay tuned that the full, we have a new release of Quick Strike coming. So you'll see new color mode, some change in structure of a few things to make things easier, less overwhelming for the new person who's looking at stuff. Remember, we still have those quick apps, those $300 a year per app for the TWIFO and for the spread builder and for the quick options education tool, which you haven't seen yet. Go take a look at that over on our site and watch the video, see if that's of interest to you.
Yeah, I know you've been tweeting up a storm about that. That one seems pretty interesting as well, the options education.
It's getting a lot of watches too. Yeah, we're going to be adding some macro hedged levels into the site as well. So they'll give you your short, mid, and long-term directional ranges for the future. So I think that's going to be pretty good. And of course, always doing work for the CME. So we'll have some new tools coming out soon. Some ability to do some cross margin checking via the correlation matrix. So always good stuff coming. But the dark mode, super excited. The site just looks awesome with it, and I didn't think I'd like it because I tried to stay away from everything that the other people were doing. But in the end, I think people will enjoy looking at it that way. So anyway, Albert, good luck. Thanks for coming on. Always welcome, and we'll be thinking about you.
For having me on today, guys.
Yes, good luck in the near future, even though I'm sure you won't need it there. And on behalf of Albert and Nick, and even our buddy Sean, who's out there traveling hither and yon, remember, if you want to learn more about all the data they have coming out on all things FTSE Russell, vol data, they have all those overwrite indices and everything else, FTSERussell.com, FTSERussell.com, the place to go. Just give them a follow on Twitter at FTSE Russell. All that data comes out there as well. On behalf of Sean and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in questions, for listening live, for voting in our polls, all the fun stuff that you guys do. Keep it coming, and we'll see you back here next week for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.